on the YouTube thingy. I'm hoping you can. So that's the one thing. So what I'm showing right now is just my workspace link. So just keep that in mind in there. I think that's a big deal. So that's number one. And let me go put that, like you said, let's go put the image of what I'm doing and let me put that on YouTube. Like I said, thank you so much for this. So let's see if I can do it. And like I said, there's nobody after me. So if I'm taking a second, that's just the way it is. I can't put it over there, but you have it in here. So this is what I wanted to show you. Here's my chart setup. Like I said, I tried to copy and paste it for you. And this is it. So first, if new, download the Thinkorswim platform, like I mentioned. The second thing, I got to show you the candlesticks, and I'll show you all this. And we're going to go to a blank slate in a minute, so you could get sort of an idea of how we're doing this. So in there. So first things first, I'm going to take this off. We're going to go put in this. So now I just want to mention, just because I have these kind of indicators, even a lot of people on Simpler use different ones. And whatever gets you to the end game, which means coming out ahead, that's all I care about. So just keep that in mind. That everybody uses different ones. Now, the reason I use the ones I'm doing is most funds, this is what they use. But it can be adapted at all times because there's all kinds of shapes and sizes of algorithms. So the first thing I do is I like to share this. These are my studies, and I'll go over them. So let me screenshot that for you. And like I said, I'm going to go to a blank slate, and I'm going to show you all this. But let me go and show you this. I'm really individual. So definitely individual. And I wanted to show you this. And let me try to do the file. There. So that's what I use. So you have the share screen for my setup. You have the share screen, not scare screen, the share screen for my charts. And then, of the indicators. And now let me give you the share screen for my chart layout. So this is just really, I wish somebody had done this for me. So go to copy. This is my screen layout. So that's what I'm doing right now. So that shows you everything. Now let's go into it so you get sort of an idea. So number one, 9 EMA. Right there. Right here is a 20 simple. Here is an ATR trailing stop. Now, a lot of people use other things to keep you on the correct side of the market. As you see, NVIDIA has been over that that green line for a long time. So just keep that in mind. So that's a directional thing, and I'll go over it when I build it to show you. That's the 50, and this is the 200. Now, you might ask, if you love that ATR trailing stop, why do you have a 9? Because of this. Now, I don't want to make this too complicated, but when a stock goes down too fast, the average true range widens. So what happens in there is this. The average true range widens, which means the average ATR trailing stop that has to do with a true range gets too far away from here. So that's why I use a 9. So if I shorted down up here and then it fell apart, I go to a 9 EMA to get myself out. If you had done that here, you almost would break even. So that's what I use that for. So a 50 is to determine if you're in an uptrend or downtrend. Now, a lot of times I'll use a daily or I'll use a 4-hour. So I'll use a 4-hour. As you see, this is the first time in a long time that the NVIDIA is under the ATR trailing stop and the 50, barely. So, but this determines trend. So if I see a bull flag or a bear flag, usually if I'm trading, let's say a 15-minute chart, I want to go to a 4-hour to determine the long-term direction. So when it's in an uptrend, bull flags are more likely to work and vice versa. So I hope all that makes sense in there. So those are my indicators down up here. Down here is a MACD 2-line. So this has to do with moving average convergence divergence, but basically that 3, 10, 16 means a 3 moving average. I'm using simple. So a 3 simple moving average, a 10 simple moving average, you subtract them. So 10 minus 3, and everyone's a dot. And then you take a moving average of those dots. So, I mean, that's what we do in there. But don't get too involved in that. It's only about having an oscillator. You can use RSI, you can use stochastic, you can use different lengths, whatever gets you to the finish line. So that's what I use. Sometimes I go to exponential. It's a little different. In fact, this morning, 5:30 in the morning, I was wiggling between simple and exponential. So just wanted you to know that it's not a set thing, not a set thing. So just wanted to let you know that. So in there. So just keep that in mind. So yep. Priyanshu, that's from my chart patterns mastery course on chart patterns. Number 1 is the chart patterns. Number 2 is price support and resistance. And then I'll look at all the others. So definitely the price action is first, but as you see, you have a bear flag price action, but it got oversold. So that's where the oscillators come in. So then I want to see how the oversold is worked off. I'm going to probably be doing a class on MACD and bearish patterns, but you're definitely right. No doubt about it. So in there, but getting back to it. So here's the MACD. That's all I use. This is the average of this. That's all. And I usually use it more like if I see a bear flag, but it's oversold, and at support, then I'm probably going to wait for the first oversold rally, like now. So that's what I'm doing. So the next thing in here is to take a naked chart, take it all off. So let me show you what we're talking about. I'm going to take off every indicator. Make this a raw chart. There. And by the way, you see it right there. There's your support. It really helps having the overlay of everything. So I'm going to make this nice and big. There. Now I'm going to remove everything again. There. Now, there are a couple of things that I think are important. Number 1, I use candlesticks. Everybody has a different thing. So the first thing is to go to style and go to settings and go to all this. I go to appearance. And that's what I use. I have a white background on the bottom. My cursor, I hate looking at a cursor, so I have it the same color. I have the fill up, fill down, and I'll screenshot this. I love screenshot this stuff because, like I said, I wish somebody had done this for me when I first was setting up Thinkorswim. And let me put that in there for you. There. So those things I think are really important to have this. To have the fill up, fill down, show wicks, all that. So that's a big deal. So number one, I do candlesticks. So that's the first thing to watch. The second thing I do in here is I change the appearance. Like I said, I like a white background. The other thing, definitely you could take trend lines and change the color. You see the trend line down here? You go to drawings, drawing tools, I have that. So on down here, because I didn't know this for a long time, you go to edit properties and you can have it red, you could have it blue, you could have it width, you could have style. All you're doing is editing properties. And then if you want to activate, you right click and go activate. Pretty cool. I think it's pretty cool, but you know, that's how I feel. I think it's really cool. So wanted to show you that. Next thing, how the heck do you add the indicators? And that's the next thing. So like I said, the first thing is the ATR trailing stop. Now, just to let you know, this half-hour session, I have no idea how I can do this in a half hour, but I'll do my best. All right, you go to studies. You go to edit studies. And up here, I'm going to put the ATR trailing stop. It's just in here. There you go. Now it has Wilders. I don't use Wilders. So I use, like I said, a simple or an exponential. Either. I'll put the simple in there. Down here, see those little colors? Those won't show up when you're looking at a white background. So I make it buy, believe it or not, it's opposite. So buys red, sells green. So now you have the ATR trailing stop. So that's number one. Number two now is what I showed you about, like this went too far. So you need a 9. You need a 9 EMA. So now I right click. I go to edit studies. And I go down here to moving average. Now, just to tell you, it's a pain in the rump. Here's all your moving averages. All those. But simple moving average is under S. So if you're trying to find your moving averages, it's under simple moving average. Like I said, pain in the rump, but that's the way it is. So let's just one by one build this chart. So we're going to take moving average exponential. There. So I have the 9. That's my default. So then I go over to colors. So I want it blue. That's just personal preference. And that's another thing. You see that color? You can click on it and click more, and it gives you like a rainbow. I like it too, or I won't be able to see it. So now you have that. So in fact, I'll put this on the S&P futures. There. So now you have a 9 and you have the ATR trailing stop. Now, just to let you know, a lot of people on a 1-minute chart use this sort of as an algorithm. Like you buy, you cover your short here, but like I said, you got to use the 9 in combination. This is sort of slop, as you see. And like you mentioned on the YouTube channel, there you go. There's your price. Yeah, that worked. So yeah, definitely that worked. So about that little inverse head and shoulder stuff. So definitely that worked. So, but that's your price. You were talking about price. There it is. So getting back to it. So we got this. So right now we have the ATR trailing stop and we have the 9 EMA. Now, like I said, I add a 20 SMA. Now, all these are to determine to be on the right, correct side of the market. So I go all the way down to simple. It doesn't make any sense. It should be under moving averages, but it's not. That's the wrong button. There. And I have default 20. So then I go over here and I like using this. Just the 20. Don't worry about the other stuff. Not a displacement. That. So now I have the 20 in there. So that's what I have in there. Now, like I said, longer term average is the 50. So the 50 is a big deal in here. So let's go put the 50 in here. That's a simple. Now, I could have just double clicked on the simple 3 times because we're going to be using the simple 3 times. I'll show you. There. So the 50, usually I use a red, but I don't want them to all get messed up. A lot of times I'll use a dotted line. The 200, yeah, I've been using also red. Like I said, that's personal preference. It can get messed up. And that's those indicators. So just to let you know, when you see all of these, that gets to be a pain because it gets confusing. There are certain times it works better than others, but I overall use a 9 and the ATR trailing stop. Just want you to know that. That's number 1. So now we got to add an oscillator. Like I said, you could add RSI, you could add stochastics. I use that MACD. So I go to studies, and it's not under MACD. It's under 2-line MACD. Right there. MACD 2 lines. The default is 12, 26, and 9. I haven't seen that work. So I go over here and I change it to 3, 10, 16. Like I said, that's my averages. Now, there's 3 things here. The 0 line is just by default is like pink. You can make it anything you want. Average, I like it blue. That's the longer term line. That's an average of the difference of the two. Then the value, that's the short term oscillator. That's the difference between the 10 and the 3. And I left exponential. You can have it simple, like I said. And there you go. So those are all the things I use. Now, you might say you're not comfortable with the MACD on the bottom. You can definitely go and use like an RSI or something. So let me show you that. You could just go to this. Now, I don't think it's as reliable, but all you want is some kind of oscillator. There. I just don't think it works as well. But you could have an oscillator and use the RSI instead. Sure, you could do that. But I use the MACD and then all these. So let me take this and show it again. That's my chart setup. So if you're redoing the video, that's what I use. I've found that the trailing stop, and I put training. Sorry about that. Is more reliable. But I definitely use a 9 if the market starts going bonkers. So definitely use that. So keep that in mind in there. That's what I use. So that's my whole thing about oscillator, keeping on the correct side of the market and using these if the market moves too much. And that's how I do it. So are there any questions for me? Because I love answering the questions. Don't be afraid to ask questions. And like I said, a lot of this is personal preference. If you want to use candlesticks, great. You could use bars. You can use anything. But look at this right in front of you. This got up here. It looks like it's going to the moon. I cannot, in good conscience, buy when the MACD is that overbought. Just can't do it. So just want to let you know, I cannot do that in good conscience. So, but that's why an oscillator is so important. How about a 15-minute? Well, there you go. You're under that ATR trailing stop and it's overbought. That doesn't mean it can't go higher, but it's really tough for me to chase that kind of market when you have that. So I don't, but that's what the oscillator. So I don't use the MACD and the RSI at the same time. I think it just gets too confusing. You can. I mean, you can experiment and try to get the same levels, no doubt about it. So you could definitely use either, but it just becomes like information overload. So you could have all that, and then you could have another, which a lot of people use. They use a slow stochastic and a fast stochastic, but I've just seen that these are the ones that work for me. But don't get me wrong, I experiment all the time with this, all the time. If I find something else that gives me an edge, great. So that's the kind of stuff I do. There's this stochastic slow. And you can have those. I'm going to take off this one because you hardly can see it. So I'll take off the RSI. And there, you have a slow and a fast. That's one way to do it. So yeah, we could look at that. Like I said, I usually take just the MACD. And the overbought, oversold, you have to put in context. So if you're in a downtrend and this gets back to the zero line, that's like overbought in a downtrend. It doesn't mean to short there. It means to look for reversal candles. So it's more relative. So if you see this overbought in a downtrend determined by all of that, yeah, then that's enough of an overbought. So if you get down here, the oversold, well, you see what happened. You don't short there. You got to wait to see what happens. Now, this obviously could go even lower, so you use those candlesticks. So if it got under it, yeah, then that could go lower. So that's the way. But there's another thing in here about overbought, oversold, but I'm going to have that really in a class. But about that. But there are ways to anticipate the red line in the MACD. There are ways to anticipate it. So it's pretty cool. So that's how I do it. So just keep that in mind. So definitely put it in perspective of the trend. If you're day trading, there's a 15-minute. It's overbought. That doesn't mean to short. It means you could look for a reversal candle. I wouldn't know. I don't know about that one. So if I get where one indicator is oversold and one's overbought, I just usually back away. So that's what I do. So, and like I said, I use a MACD, but it's personal preference. So I've just been honing on how to use the 310. I've used it for 40 years. And it just seems to work for me. It can work different for you, no doubt about it. So just want to show you that. That's my 30 minutes. And I hope you this helps. Like I said, all of those things step by step are definitely in some kind of video that you can replay. And definitely I'm glad I shared that. That's what I use. So I hope you find this helpful. And MB, I trade stocks and options. Yeah, I was on the floor on the CBOE for 8 years. So I definitely trade options, definitely trade stock. So everybody take care. Thanks for being with me. Like I said, I hope you found this helpful.